This is the Profit Academy podcast, proudly powered by you.
Ever feel like the stock market is just one giant, unpredictable thing, like a roulette wheel?
Yeah, I can see that.
Well, in today's deep dive, we're going to be talking about figuring out if you're more of a high roller or maybe someone who prefers to watch their money grow slowly but steadily over time.
Right.
Our source material today introduces us to Jake. Now, Jake is glued to 6 screens all the time, riding the wild waves of day trading.
Mm-hmm.
And then we have Emily, who's perfectly content checking her portfolio once a quarter. Who do you think you're more like?
Well, it's interesting, it's a really fascinating comparison because it highlights how differently people can approach the market,
Right.
It's not just about how much risk you're comfortable with, it's also how you view time and what you're hoping to get out of it all.
Exactly. And that's exactly what we're going to be unpacking today. We're going to be diving deep into day trading versus long-term investing, exploring the benefits, the drawbacks, and most importantly, helping you figure out which path might be right for you.
Definitely.
So let's start with day trading.
Okay.
It's often portrayed as this like fast-paced, high-stakes game.
Yeah.
And well, I mean, it is.
Yes.
Essentially, it's about trying to make money from those short-term market movements, sometimes even within just one trading day.
Yeah. So it's all about, trying to profit from those quick little price swings, buying low and selling high, but obviously on a much faster scale than traditional investing.
So it's not for the faint of heart, right? I mean, our source material mentions the potential to make a lot of money, but also the possibility of losing a lot.
Absolutely. It's high risk, high reward. I always kind of think of it like trying to time those waves at the beach.
Okay.
If you catch the right one, you're riding high.
Mm-hmm.
But if you misjudge it, you might get completely wiped out.
Okay. That's a vivid image.
Yeah.
And it makes sense, given how much expertise is involved. The source mentions needing a deep understanding of market trends and indicators and even economic news to be successful at it.
Yeah. Yeah, it's not just about luck. Day traders need to be able to really analyze data, make decisions quickly, and maybe most importantly, keep their emotions in check. You make one wrong move based on, panic or excitement, and you could see those gains disappear faster than you can say margin call.
Yeah. So speaking of keeping your cool, that kind of brings us to long-term investing, right? This approach seems so much calmer.
Yeah.
Almost like, planting a seed and just watching it grow over time.
Right. It's a good analogy.
Yeah.
Long-term investing really is all about buying and holding assets for years, sometimes decades.
Mm-hmm.
Instead of trying to time the market, it's about trusting in that overall upward trend of the market, especially if you've diversified your portfolio across different asset classes. Yeah.
But it is still possible to lose money with long-term investing.
Yeah.
I mean, the market, it goes through dips and crashes.
Of course. No investment is totally risk-free, but historically speaking, the market has always trended upwards over those long periods. Just think about it. Back in 1950, the Dow Jones Industrial Average was around 200 points. Today, it's over 30,000. That's the power of long-term growth.
So it's more about weathering those storms and not panicking when things get a little rough.
Exactly. It requires patience and discipline. You're not checking your portfolio constantly or reacting to every little market fluctuation.
Yeah.
Instead, you're focusing on the long game and you're trusting that over time, your investments will grow.
That makes sense. But I mean, long-term investing doesn't have that same get-rich-quick appeal as day trading, does it?
No, it definitely doesn't.
Yeah.
And that's why it's so important to understand what your own motivations are, what your financial goals are.
Right.
Are you looking for that quick adrenaline rush and maybe the potential for fast profits? Or are you more interested in building wealth gradually and more securely over time?
Those are some pretty important questions.
Yeah.
And it sounds like the answers are really going to determine which path is right for you.
Absolutely. There's no right or wrong answer here, It all depends on your own circumstances, your risk tolerance, and even your personality.
So let's say you're starting to lean one way or the other. What are some of the drawbacks to to consider? I mean, no investment strategy is perfect.
Right.
Yeah.
Right. Let's start with day trading.
Okay.
You know, as we already discussed, it's incredibly demanding. It's basically a full-time job. It requires constant attention, a really deep understanding of the markets, and nerves of steel. You're basically competing against professional traders and algorithms that can process information way faster than any human can.
So it's not something you can just do like casually in your lunch break.
Definitely not. You know, without that proper expertise and dedication, you could very easily lose more money than you gain. And even the experienced day traders face that constant risk of burnout just from the pressure and the intensity of the market.
Yeah. That sounds pretty stressful. So if you're looking for a more relaxed approach, long-term investing might be a better fit.
It certainly can be, but remember that even though it is a more passive strategy, it still requires some level of involvement. You know, you need to research companies, understand their fundamentals, and build a diversified portfolio. And you need the patience to kind of ride out those market downturns, which can sometimes feel like they last forever.
Yeah, I can see how watching your investments drop in value, even if it is temporary, could really test anyone's patience.
Yeah.
It's almost like watching that tree that you planted get hit by a frost all of a sudden. You know, you have to trust that it's going to recover.
Right.
And eventually, bear fruit.
That's a great way to put it. And that's why it's crucial to understand how much risk you can tolerate.
Yeah.
You know, how much volatility can you really handle without panicking and making, you know, kind of rash decisions.
Yep.
That's something that you have to be honest with yourself about before you dive into any investment strategy.
All right, so we've talked about the fundamentals of day trading and long-term investing and their potential benefits and drawbacks and the importance of considering your risk tolerance and how much time you have to commit.
Right.
But how do you actually choose which path is right for you?
Well, that's what we're going to dive into next.
Sure.
We'll explore some key questions to help you figure out which approach really aligns best with your individual circumstances and goals, because ultimately the best investment strategy is the one that works for you.
All right, so let's dive into those key questions right after this. All right, so we've established that both day trading and long-term investing have their own unique sets of challenges.
Right.
But how do you actually go about choosing the right path, the right one for you?
Well, our source material suggests asking yourself a few key questions.
Okay.
Almost like using a compass to navigate your financial journey.
Okay, I like that. So what's the first question that we should ask ourselves?
Well, first you really got to think about how much time you can commit.
Okay.
You know, can you honestly dedicate like hours each day to analyzing charts, monitoring the markets, making those rapid fire trades? Because that's the reality of day trading.
Yeah.
It's not just a hobby, it's practically a full-time job.
And if the answer to that is no, then day trading is probably off the table.
Pretty much, yeah. Unless you're really willing to make that level of commitment, you're probably better off exploring, you know, other options.
Okay, so let's say you do have the time or you're willing to make the time for day trading. What's the next question?
The next big one is your risk tolerance.
Okay.
You know, day trading is inherently risky. You're making these short-term bets, often with leverage.
Yeah.
Which basically magnifies both your potential gains and losses. Can you handle the stress of watching your investments fluctuate wildly?
Yeah.
You know, sometimes even within minutes.
It's a really good point. It's not even just about if you can afford to lose money. It's if you can emotionally handle those ups and downs of such a volatile market.
Exactly. Some people, they thrive on that kind of excitement,
Right.
while others find it incredibly stressful.
Yeah.
It's really about knowing yourself and what you're comfortable with.
So if you're someone who's like constantly checking the stock prices like every 5 minutes and gets anxious about the small dips, then day trading is probably not a good fit.
Probably not. But if you enjoy the thrill of the chase, you're good with numbers, you can keep a cool head under pressure, then maybe day trading something worth exploring further.
Okay, so time and risk tolerance are key factors to consider. What else should we be thinking about?
Well, and this might seem kind of obvious, but it's crucial. what are your financial goals? You know, what are you hoping to achieve with your investments? Are you trying to make a quick buck, or are you building towards a secure retirement or a down payment on a house? Or something else entirely.
That makes sense.
Yeah.
Your goals are definitely going to influence your investment strategy.
Absolutely. You know,
Right.
if you're saving for retirement, which is a long-term goal,
Right.
day trading is probably not the best approach. The market is just too unpredictable in the short term, and the risk of losing a big chunk of your savings is just too high.
But wouldn't long-term investment be too slow for someone who needs to reach their financial goals like quickly?
Well, it depends on your definition of quickly.
Yeah.
Long-term investing is about steady, consistent growth over time. It's not about getting rich overnight. If you need, a large sum of money in the next year or two, investing might not be the best solution, regardless of which strategy you choose.
So matching your investment strategy to your timeline and your specific goals.
Right.
If you have a longer time horizon, you can afford to be more patient and let your investments compound over time.
Exactly. And speaking of compounding,
Yeah.
that's one of the most powerful concepts in investing. It's essentially the idea that your returns generate further returns.
Right.
Creating like a snowball effect over time. Even small amounts invested consistently can grow significantly over decades thanks to the magic of compounding.
That sounds pretty amazing, but it also requires a lot of patience, right? I mean, it's not as immediately gratifying as seeing your portfolio jump, 10% in a single day.
True. But the potential rewards of long-term investing are often much, much greater. Think about those investors who bought Apple stock back in the 1980s and held on to it. They've seen incredible returns.
Yeah.
Far more than any day trader could have achieved in the same period.
Okay, so we've talked about the importance of time commitment, risk tolerance, and financial goals.
Right.
But it seems like there's also a psychological aspect to all of this. I mean, investing isn't just about numbers, it's about human behavior, emotions, and decision making.
You're absolutely right. Investing can be as much about managing your emotions as it is about analyzing data.
Right.
Fear and greed are two very powerful emotions that can easily lead to bad decisions, especially in the fast-paced world of day trading.
So how do you keep those emotions in check? How do you avoid making like rash decisions based on fear or greed?
Well, one of the best ways is to have a clear investment plan and stick to it. Regardless of what the market is doing. That means defining your goals, setting your risk tolerance, and choosing an investment strategy that aligns with both.
So it's like having a roadmap for your financial journey.
Right.
You know where you're going and how you're going to get there, even when the road gets, a little bumpy.
Exactly. A well-defined plan can help you stay focused on your long-term objectives and avoid making those emotional decisions that could derail your progress.
But even with a plan, isn't it still possible to get kind of caught up in the hyper panic of the market?
Of course. We're all human. We're all susceptible to emotional influences. And that's why it's also important to be aware of your own biases and tendencies. Do you tend to be overly optimistic? Do you panic easily?
Right.
Do you chase after the latest hot stocks?
Knowing your own weaknesses can help you avoid making those same mistakes over and over.
Exactly. Self-awareness is crucial in investing. It's about understanding how your emotions and your biases can influence your decisions and taking steps to mitigate those risks.
So if you know you're someone who gets easily influenced by like the market hype, then maybe you just avoid reading those sensationalist headlines.
Right.
Or listening to those get rich quick gurus.
Precisely. It's about creating an environment that supports your investment goals and helps you make those rational decisions.
Yeah.
Even when the market is going crazy.
Okay, so we've talked about the psychological aspects of investing.
Right.
But what about the practical side? What are some of the tools and resources that can help you make informed decisions, whether you're a day trader or a long-term investor?
Well, there's a ton of information available these days,
Right.
Both online and offline. You can find books, articles, websites, podcasts, even courses dedicated to every aspect of investing.
Yeah, it seems like there's no shortage of information out there.
Yeah.
But how do you know what's reliable and what's not?
That's a good question. It's important to be discerning about your sources of information.
Yeah.
You know, look for reputable financial publications, websites with a track record of accuracy, experts with proven credentials.
And be wary of those who promise those guaranteed returns or get rich quick schemes. If it sounds too good to be true, it probably is.
Absolutely. Remember, investing is not about gambling. It's about making informed decisions based on research, analysis, and a solid understanding of the markets.
So what about seeking advice from a financial advisor? Is that something you recommend?
It definitely can be beneficial, especially if you're, kind of new to investing, or if you feel overwhelmed by the complexities of the market. A good financial advisor can help you create a personalized investment plan, choose the right investments for your goals, and provide ongoing guidance and support.
It's like having a coach in your corner.
Right.
Someone to help you navigate those ups and downs of the market.
Exactly. They can bring an objective perspective, help you avoid those common pitfalls, and keep you accountable to your financial goals.
But finding the right financial advisor can be a challenge in itself. There's so many out there.
That's true. It's important to do your research and choose an advisor who's reputable, experienced, and whose investment philosophy kind of aligns with your own.
And someone who you feel comfortable working with and who you trust.
Absolutely. A good advisor-client relationship is built on trust, transparency, and open communication.
Okay, so we've covered a lot of ground here. We've talked about the key considerations when choosing between day trading and long-term investing, the importance of managing your emotions, and the tools and resources available to help you make informed decisions.
Yeah.
So where do we go from here? How do we actually apply all of this information to our own financial lives?
That's what we're going to dive into next.
Okay.
We'll explore some specific examples of day trading and long-term investing strategies, highlighting those key differences in their approaches and risk profiles.
So buckle up and get ready to explore the nitty-gritty details of how these strategies work in practice. All right, so we've covered a lot of theoretical ground, but
right.
let's get down to the actual strategies.
Yeah.
What are some actual day trading strategies that people use?
Well, you've probably heard of scalping.
Yeah.
Imagine trying to skim tiny profits off those minute by minute price fluctuations.
Oh, wow.
That's essentially what scalping is.
Yeah.
It involves making tons of trades throughout the day, holding positions for very short periods, sometimes just seconds.
Wow, that sounds intense.
It definitely requires a certain personality type.
Yeah.
And a very high tolerance for stress. Another strategy is momentum trading,
Right.
where you're basically trying to ride the wave of a stock that's experiencing a significant price move.
So you're looking for those stocks that are suddenly taking off
Right.
and hoping to jump on board before it's too late.
Exactly. You're trying to identify those trends early on and capitalize on that upward or downward momentum.
Yeah.
But of course, this requires, careful analysis of charts, news, trading volume. You don't want to get caught in a false trend.
It seems like day trading is all about timing and speed.
Yeah.
Can you even make these decisions as a human, or do you need some sort of supercomputer?
Well, technology definitely plays a huge role in day trading, but human intuition and experience are still important factors. It's about finding that right balance between data analysis and your gut feeling.
So what about long-term investing? What are some common strategies in that realm?
Well, one popular strategy is value investing.
Sure.
Think of it like treasure hunting.
Yeah.
You're looking for those undervalued companies whose stock price is lower than their intrinsic worth. It's about finding those hidden gems that the market hasn't fully recognized yet.
So you're betting that the market will eventually catch up and the stock price will rise.
That's the idea. Value investors, they believe that over time the market will reflect a company's true value.
Mm-hmm.
So they're willing to be patient and wait for that to happen.
Our source material also talks about growth investing. What's the difference between that and value investing?
Well, growth investors are looking for companies with high growth potential.
Okay.
Even if their current stock price is already high, they're betting on companies that are expected to expand really rapidly in the future, leading to even higher stock prices down the line.
So they're less concerned with whether a company is currently undervalued and more focused on its future prospects.
Exactly. They're looking for those companies that are disrupting industries, innovating, and creating new markets.
It seems like both value investing and growth investing require a lot of research and analysis.
They do, you need to understand a company's financials, its industry, its competitive landscape, and its overall growth potential. It's not just about picking a company with a cool name or a product you like.
And then there's index fund investing,
right,
which seems to be a really popular choice for long-term investors.
Yes. Index funds are a great option for those who want a more passive approach to investing. Instead of picking individual stocks, you're investing in a basket of stocks that tracks a specific market index, like the S&P 500.
So it's a more diversified approach,
right,
which can help to reduce risk.
Exactly. Index funds offer that broad market exposure and tend to be less volatile than individual stocks. Plus, they require less research and management, making them a popular choice for busy individuals who don't have the time or the expertise to actively manage their portfolios.
Okay, so we've explored a variety of strategies for both day trading and long-term investing. We've talked about the importance of time commitment, risk tolerance, financial goals.
Right.
We've also discussed the psychological aspects of investing and the need for a solid plan.
And how to find good resources and information.
Exactly.
Yeah.
So what does all this mean for you, the listener?
Right.
How do you take all this information and make sense of it for your own financial journey?
Well, it means that the choice between day trading and long-term investing is a very personal one. There's no one-size-fits-all answer. The right path depends on your individual circumstances, your goals, your risk appetite, even your personality.
The key is to find a strategy that aligns with who you are, what you want to achieve, and how much time and energy you're willing to invest.
Exactly. And remember, there's no shame in starting small.
Yeah.
You don't have to dive headfirst into the deep end. You can test the waters with paper trading or by investing a small amount in a low cost index fund.
This deep dive has hopefully given you a better understanding of the two main avenues of investing.
Right.
But it's only the beginning of your journey.
That is.
There's so much more to learn and explore.
Keep reading, keep researching, keep asking questions, and remember that investing is a marathon, not a sprint. It's about making informed decisions, being patient, and staying focused on your long-term goals.
So as we wrap up this deep dive into the world of day trading and long-term investing, we want to leave you with this thought. What's one small step you can take today to move closer to your financial goals?
Maybe it's opening a brokerage account, downloading a financial tracking app, or simply reading a book about investing. Whatever it is, take that first step and keep moving forward.
Remember, your financial future is in your hands.
It is.
It's up to you to shape it and make it what you want it to be.
So go out there, be informed, be empowered, and be the master of your own financial destiny.